Okay, it's navigating the tides. It's the Paxhia, represented this time by Morgan. Thank you so much for your time.
Solo the Paxhia.
What's that?
I said the solo the Paxhia.
Sure. Well, we still are delivering on the promise of the Paxhia. Just happens to be embodied by one Paxhia.
That's right.
So
thank you again for having me. It's good to be back.
Of course, and thank you so much. So we did 3 myths, and we liked it so much. We're going to do 3 more myths. So here we are. We're making our way to the end of 2019. Myths abound, unfortunately, in the cannabis economy. Some of them having to do with cannabinoids, but that's not what we talk about here. We talk about your money. We talk about investing. So what might be the first of these 3 myths?
Sure. So what we're seeing in 2019, it's kind of a test of a lot of company theses,
indeed.
And, one of them that comes to mind immediately would be the missed execution of what their stated estimate of their performance was going to be.
Forecast numbers, it turns out, are a myth.
That is, yes.
Now, forecast numbers traditionally are kind of tough to pinpoint, of course. Why specifically here in cannabis? What's happening?
So what we're seeing is the reality is often different than what you might think it should be, right? I mean, and certainly in our industry, people put out these wildly optimistic revenue numbers just by saying, well, if we grow at this percentage and blah, 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 reality comes into play, and how good were they at executing against that plan is one issue. And then the other issue is, the realities of cannabis and what regulations do to impeding growth in the short term. These are short-term kind of iterations.
Sure. Yeah. So, but quarter by quarter, miss. And that kind of informs the investor, after he or she has made the investment, which is not always fun, but that's why Morgan's here, right?
And, it's interesting or not interesting, it's unfortunate, because we look at a lot of those pro formas and we're just like, yeah, there's a very low probability that anyone is going to achieve these numbers. Most will not. And, what we usually do is we discount the living daylights out of these things to try to account for management execution and the realities of the markets they're playing in. Anyone that put a pro forma out about, fantastic growth in Massachusetts this year is feeling an incredible headwind right now.
And that, you mentioned Massachusetts, it's not like we didn't know how Massachusetts behaves, the onset, if you will, of medical cannabis and then cannabis legalization has always been stop and start there. So, yeah, no, I take your point of this is a myth.
Eating an edible versus vaping. With a vape, you get a pretty immediate onset. With an edible, who knows when that's going to kick in? And boy, when it kicks in, it can kick in hard.
Right. So it's not like we can't get to these pro forma. It's just that in this quarter and that quarter, we might be off as far as what we're looking at short term, yet still believing in long term, perhaps.
Yeah, and that can have massive impacts on the spending of the business too, right? Because if they're spending on this plan thinking these revenues are going to come and then they don't, and then their cash balance has been depleted down to X, and now they need capital, and now their pro forma doesn't look as good because their revenues aren't there and they spent all this money, and it kind of just keeps feeding in on itself.
Are there examples of, I'm just going to put out my pro forma so that it kind of matches my colleagues, yet I am clearly not spending like they are, so I know what I'm doing kind of thing? Is there that approach? Have you seen that?
There are very few that actually seem to be concerned about their cash. Most are, we kind of say it's like putting a brick on the gas pedal and jumping out of the car as it's driving off a cliff and, hoping it's going to land safely. It's just like, that's not going to work. You can't just keep spending thinking that there's going to be another round of capital immediately available, or that, this is all going to catch up. And, we're just seeing it really, it's amazing in 2019 how much these pro formas have been exposed. And a little bit too is the analysts have been very accommodating of these pro formas. They too have had overly optimistic pro forma plans themselves of how they're benchmarking these companies. So there's just a lot of factors that go into play, and especially when you're, as an investor, looking at these businesses and everything I was just talking about, burning through this cash, revenue's not hitting. So you're now needing to raise capital potentially at lower prices, and then your share count is going up considerably. And so someone that thought they were buying a $3 stock that was $3 6 months ago might actually be more like worth $6 because the amount of shares they've had to issue. But people don't realize that. They're just like $3 is $3, and it's not the same. So,
starting to feel like the late 90s in e-commerce land, in .com land, isn't it?
History has, what is it? The Mark Twain saying, history has it often repeats itself, or it often rhymes, something like that. It doesn't exactly repeat itself, but it rhymes.
Got it. Fair enough. All right. So first myth, forecasts or pro formas right now. Second myth.
Too big to fail.
Okay. I've heard of that in other industries.
Yes.
What do we mean here?
So what we mean, so there are, there's what, probably 7, 8 large multi-state operators.
Okay.
And so people are like, oh, these, they're just, they're those big established companies in our industry. They'll always have access to financing. These are safer companies to be investing in because of that. So that's the myth.
We have examples of extremely large institutions, which we thought would be there forever, simply going away and going away very quickly. Some of them have gone away very slowly.
Yes.
But we have examples of this in other industries, pretty much any industry.
We're still just people, it's just another industry, another sector. Yeah, I mean, we're watching how old is General Electric? And that company could be going away. And, if you would ask someone 10 years ago, well, longer than 10 years ago now, but because of the financial crisis, but, 15 years ago, no way would anyone ever believe that company could just go away. Yeah. It was such an established institution for so long.
Yeah.
But, there's some really valid questions about that company right now. And so, it never stops. And that's just part of the innovation, right? Is if you don't continue to push further and develop and invest in innovation, you're going to get passed by those that do.
Exactly. So, you'll be stuck looking at the scrapbook Kodak pictures of you and your Studebaker.
Yes.
Too. All right. So the second one is too big to fail. That is not true. So that is a myth. And number 3.
Number 3 is what was the number 3?
Oh, number 3, too big to fail. Yeah. And the winner has already been established, I believe, yes, is what I remember. So, of course, Emily is not available. So she wouldn't have said this.
No. But the winner's already been established. That is, you're absolutely right. That is the third myth of the day.
And so what do you mean? So it's kind of, they are linked, right? Too big to fail and the winner has already been established. But, I've got some thoughts on who the winner might be. So what could change if the too big to fail is a myth? What could change as far as the winner already being established? A fast mover hitting the scene right now might be doing X as opposed to Y. What might that be?
So I actually would go almost a little bit different of like the tortoise and the hare.
Okay.
That those that have kind of gone out fast ahead of everybody and seem like they're too big and they're established and that they're a winner, what happens if, it's kind of like the dominoes. All of a sudden they don't get capital, and then what happens? And then the winner becomes very weak and, all of a sudden goes into retrench mode, versus those that are being very smart about building and, focused on the operational execution and building the team. And, as we always talk about at Poseidon, is the foundation. Making sure that you've got a house, a foundation before you build the house. Or, the other kind of thing we talk about in this industry a lot is, a lot of these people are still building the rocket ship as it's taken off the launching pad. Is that really going to get through the atmosphere, or is it going to burn up? So, yes, I think this is one of the best myths of our, and this could be the case for a couple more years.
Yeah.
I don't think it's safe to say for anybody. I think it is a very interesting time in our industry. There's a lot of tension happening. There's a lot of shifting happening, and but the smart and focused will eventually start to emerge here. I think there's some that are showing some of that early promise here in the U.S., but rest of the world, I think it's a wide open field for sure.
There you go. So Aesop had it way back when. Tortoise and hare, it's great. Fantastic. Look at the hare. Oh my God, that's wonderful. But also pay attention to the tortoise.
Yeah. Because even the tortoise and cannabis, I mean, it's still going 30% annualized. I mean, that's still a hell of a tortoise.
Exactly. And those tortoises also might be already profitable companies, by the way, which is interesting. Right.
It's interesting as we're talking about global macro influences and what happens if there is a global recession and what does that do to capital flows. And again, going back to too big to fail, can you get access to capital? But if you're at least profitable, you can keep chugging along through a challenging environment. And, it's a great thing about cannabis too, is I do think it's a counter economic cyclical trend at the moment, but that's probably for another day and not in the myth section. I'd put that in an economic discussion.
Right. Yeah, no. And we'll obviously continue to have that conversation. One man's opinion as we, so again, we're kind of making our way to the end of 2019, recession certain or still not necessarily as far as you're concerned.
I think there's mounting pressure.
What a magnanimous way to say that.
Yeah. I mean, these things are really challenging. There's each environment, for those of us that lived through the dot-com bust and then the financial crisis, and those that went back, before that and remember the different recessions, they always feel different. They always look different, and I think we're very distorted times. So I don't think it's as easy to point to certain factors that may have been historically as concrete, but they all kind of start to add up after a while. That's why it seems like it, and the animal spirits are starting to shift. And so if we start to see retrenchment there, I mean, this is the economy, the stock market. It's a psychological analysis, right? And so it does start to impact the willingness to take risk and the willingness to spend, and then it becomes a self-fulfilling prophecy.
And so we shall see. I can't wait to do that with you. There's potential I'll even be out there. We'll see. No, let's not plan anything before it's planned. But for now, that's navigating the tides. That's 3 more myths in the cannabis industry. Morgan, thank you so much for your time. Appreciate it.
Thank you.